So now let's just take a quick look at the euro dollar on the setup that we have. The last time I checked, we posted a sell setup. We had a sell setup at the euro US dollar, but it's not because of we just looking to sell the whole time without knowing what's happening within the market. But most importantly, we want to be on the right side of the momentum. We want to be at the right side of where the momentum is at and where the banks are moving towards. So now with this one here, we've got a sell setup. The reason being is that on the daily time frame and the 4 hour, the heavy momentum is all the way to the downsides. Okay, let me just move up quick to the 4 hour. The heavy momentum is to the downsides. Okay. Okay, 240 hours. Okay.
Nice. Network, no?
Hey, but how's the network your side? Is it okay?
Mine is fine. I told you when electricity's off, bruh. I told you about the story. Remember?
Yeah.
Like, kills.
Hey, but because even now, man, I
Kills when
don't know.
electricity's gone, bro. I've noticed. It's the electricity, bro. Somehow, it's the
Yeah,
electricity.
plus
Trust me.
the electricity is messing up with telecom because I use telecom. So when the electricity is off, telecom also it's a bit
Eh?
off.
Same thing.
Oh, because I don't know how I'm gonna do this now because it's slow.
It's not something we used to, no?
Hey, bruh.
I feel you there.
Yeah, but let's just try to push and we'll just see what we can make up of it.
Uh,
Sure. But yeah, what I was saying, we can simply see that whenever you see red candles, there's a lot of them, and whenever you see these red candles, like the momentum is heavy. Whenever you see red candles, basically it's huge, like it's huge candles. It's an impulsive phase. Whenever you see a red candle, it means that it's in an impulsive phase. Like let's see if you take a look at this, take a look at this move, take a look at this move, even this move here. So with this, yeah, we're anticipating the next move to be something like this. Okay. With this one here, we're anticipating the next move to be at least these red candlesticks all the way past the 90% rule to the daily target. Okay, but let's just move on quick to the 60-minute. So I'll show you guys on how we can capitalize from this setup here. And yeah, I hope that the network doesn't change our plans because like I just wanted today's session to be like very much worth it,
yeah.
Okay.
Entry points.
Entry points, we have to speak about that. Okay, but simply what you can do here, you can simply see this impulse face, this correction, this impulse. There's a deeper correction. At the same time, there's just one huge impulse, a deep correction, and we're anticipating that impulse all the way to the downside. Okay, all the way to the downside. So now, one thing that you should know too is that with this trade here, this is a perfect setup because you can see this pattern that has been presented here, this bigger structure. This is a continuation pattern to the downside. Okay, and even if you take this central pin here, there's a pattern within a pattern, which increases the probability of the specific trade that we're taking. This structure here is telling us that it has to drop to the downside. Okay, here is telling us that it has to drop, and this bigger move is telling us eventually this whole price is going to go to the downside. And even if you understand your multi, I think during the week I sent a PDF whereby it spoke of multi time frame, not multi time frame, multi touch confirmation here. Then here's our first touch here, here's our second touch. So our third touch, possibly somewhere around here, you can see it. And here it gave us like a false breakout. It gave us a false breakout and then it shot back in here. Someone would have seen this as a breakout and bought. But now, us understanding on how price and the market works, the nature's theory, we know that no, there are false breakouts that can happen. We should just wait for the market to tell us that now is the right time to take the trade. Okay. So now with this one here, there's types of entries that you can either take on this one here. Yeah? The first one would simply be like, okay, let me just do this. The first one would simply be as soon as the market opens, you place a sell stop. Not even a sell stop, you just place a sell entry. Can you please unmute your mics? Okay. Okay, sorry about that. I was on mics. But yeah, What you can also take a look at is that what the Sonia, as soon as the market opens, you place a sell order, But now the stop loss is gonna be slightly further compared to any other entry, because once you take a sell entry here, that means your stop is gonna be above here. Okay, your stop loss is gonna be above here. Believing that this thing is creating lower highs and lower lows, because you can see this is a lower low, this is a lower high, lower low. We're believing that this here should be a lower high. Can you see it shouldn't basically what price shouldn't do is that it shouldn't go past somewhere around this area here, because these are our previous lower highs. If we go past that, then we're gonna start thinking that okay, now maybe it's gonna form higher highs and higher lows. It's a change of trend. Okay. So now and another thing that makes us keep this sell bias is because the previous week, I think it was last week or last of last week, we had this beautiful setup here, and this impulse out and this correction and the next impulse all the way down. But if you take a look at it, this didn't go down all the way to our 90% rule, so which still shows that there's still more chances of this price to still go down and hit the 90% rule. Can you see this this specific the specific analysis is still valid of the 90% rule of this previous structure one. But even now, you can start using this as your first target, which is going to be very, very great. Like when you compare the risk and the reward, but it will still be almost like the same thing. Okay. But let's just okay, there we go. Okay, so now with this one here, one thing that I can say is that let's say when you're taking an entry, one thing that you can do is that I normally don't use market execution, because it's simple. Like market execution, you're basically executing your trade when the market tells you to do so. Do you get it? But now with the orders, basically what you're doing is that you're placing an order to say that I want to buy or sell this thing when it's at the specific price, meaning that you are in control of your order, you are in control of your trade. You are the one that says I want to sell at this level and I want to buy at this level, not what the market is telling you. So what I do is that with the orders, most of my trades, like what 95% of my trades come from pending orders, not market execution. And one thing that I'll do is that if you take a look at this move here, one thing that I can do if I want to be involved in this trade, instead of just saying it broke, let me sell now, I won't do that. Instead, I'll just put a sell stop below here, like 2 pips below the previous price, like just here below this section here, 2 pips below it, believing that whenever it goes down, it should break the low and continue creating what new lower lows. Do you get it? So when I place my stop loss there, my sell stop, I know that if it does activate me, that means that the market is going in my direction. It's going to create more lower lows. So I'm not wrong. But if it doesn't activate and it goes up or something, what's happening? Okay, but then if it doesn't activate me and then it goes a bit higher, it shows that no, the market wants to sell maybe at a specific level. You should start adjusting your sell stop or your entries. Do you get it? So because one thing that can happen here too is that if you take a look at this move here, this was previous resistance, it can simply turn into support and then go back up, maybe create a double top formation, then go all the way down. That's very possible. The market can do anything, so we can't just be sure of one thing. That's why when I enter such trades, I'd rather put myself stop below, somewhere around here. So I know that even if the market breaks and activates me, it means that it broke this previous resistance, it broke this support, and now it's going all the way down. That means if it comes back, it'll come back and turn that previous support into resistance. Okay. So now here you can just have simply two scenarios. Okay, I can even add up with the third one. The first scenario would simply be you taking a sell stop just below this price here. So when it continues to go down, you're on the right side of the market. The next entry would simply be if, let's say, price goes all the way up and maybe does a double top formation, which it can happen. Doesn't mean that it can happen. It can also happen. You should also expect a sell setup there. But the one last one is, okay, I want to draw the last setup here on a three, so you guys can see on how we can capitalize from this one here. Okay. And the normal ones that we take, the ones that I showed you now, it's the risk entry. Two types of entries. There's risk entry and there's reduced risk entry. The one that I showed you now is the risk entry. Okay. The reduced risk entry would simply be you waiting for the market to impulse away from the breakout area, seeing that and confirming that it has broken out, and then correcting in a manner whereby it's showing you that it's ready to continue going down, then you take a trade. That's a reduced risk entry. It's when there's no longer a lot of risk on the table. Can you see that? I want to trade a bit. Okay, like impulse away from price, and then just a small 6 to 8 hour correction. You should understand that on a 1 hour time frame, corrections normally take 6 to 8 hours for you to start putting your orders. Okay, and something like this, so once prices moved away and then it starts to stall a bit, you can wait for at least 6 to 8 hours, then you start to place your order below, like below the previous low. Like let's say if now it came here, then it started doing something like this and it's taking 6 hours now, 7 hours, then you can just start putting your order somewhere below it, and then when it does break to the downside, you know that you are in the trade. Can you see that? So we do know that, okay, here we've got 3 scenarios. We can either place a sell stop now, somewhere around here. So when it breaks, continues to go down, maybe wait for, it doesn't mean that it will happen. It's just that we can't predict the market. So it's also possible maybe market to push a bit upwards, test this resistance one more last time, create a double top, go all the way down. Or fortunately, the third setup, which is also a good setup, which is this one where price just impulses away and then corrects and then goes all the way down. But with this trade here, we're looking at a good, okay, let me just see. Okay, place yourself stop somewhere around here when you're taking the first entry. Okay. And one thing that I don't like about risk entry, I mean, no, not risk, reduced risk entries, that the stop loss is always like a bit huger than the risk entry. Do you get it? With the risk entry, the stop loss can never be very huge. The stop loss is always like 15 pips and stuff. Okay. Something like this being our first target and all the way down. But what I'm trying to show you here is that our first target already is 3%, 3.20%. This is the first target, So there you can still scaling, add more scalings or anything like that. But for you to just be able to see, okay, the first target is giving us 3, the risk reward is 3:1, meaning that if you take 3 losing trades, just one trade is going to go in your direction. Can you see that? This is how powerful we utilize the strategy. But I don't it's not about getting this 3%. It's capitalizing a lot on the specific trade, because what can happen is that price can impulse down, correct in a manner like this, then give you another setup that can give you maybe 7 or 8%. Then you can take that, because you know that 8% plus this 3% can add up to 11%. So it simply means that you guys should also take a look at what market is telling you. Okay. So is there anyone that wants to ask a question concerning Euro US dollar before we move on to the next? Anyone that wants to ask about Euro US dollar? Are you guys good?
Yep. Good.
You sharp, so
yeah, bro. I think we should carry on to the next currency pair.
Away. Okay. Now let me just move on to the next one. Let me just confirm here which one should I move on to. Okay, EuroCAD. We also saw a beautiful sell setup here, and I want to show you guys why I saw this. Okay. And one thing that I like about this is that all the trades here, risk reward can never be 1:3 or less. It's always 1:3 or more. 1:3 or more. Okay, take a look at this. Simply understanding if you've been through your notes and stuff, you will just understand and see, like, the more you study, the more you'll be able to see these impulse correction impulse without even having to draw them out. Do you understand? Like if you take a look at this big impulse, this is just some deep correction and an impulse to the downside. Same thing that happened here, impulse, a beautiful correction, 6 to 8 hour correction here, then it impulse all the way down. Can you see? So what we are caught up here is an impulse correction, and we're anticipating the next impulse, obviously. But now what's interesting is that now when you add up with the multi-time frame, not the multi-time frame, multi-touch confirmations, when you add up with the multi-touch confirmations, you can simply see that this setup is going to be a monster setup. Because take a look at the resistance. Remember what I always say: the first touch, second touch, third touch. See how clean the third touch is, meaning that now price has to break the support line. It has to break in the okay, and our first target will obviously be here at the 90% rule. Okay, but then this multi-touch confirmation just has confirmed that price is now gonna break the structure and go all the way down. That's how you see a breakout of a structure. That's how I know let's say how most of the times I believe that the breakouts are gonna happen. When I see multi-time frame confirming, I know that eventually when it gets here, it has to break, it won't go all the way back up. It will break now. Do you get it? So most people don't like, they miss out that point. They miss out that part. So now here types of entry, though simply be a risk entry. And if you take a look at this, even in the structure within here, this is a very important thing. A structure within here, you can simply see that this is a pattern within a pattern. This structure is also telling us that price has to go down, like it's a reversal one, and this bigger one is a continuation of this downtrend. This one is a reversal, simply telling us that like you have two structures that are telling you that price has to go down. So you're seeing that already you know where the sentiment is at. Okay, so simply with the risk entry, you could have easily, let's say, placed the sell entry somewhere around here, believing that there's a third touch of this area here, or the structure within structure and this bigger structure here, believing that there's a third touch. You can easily place a sell limit, but I don't normally use sell limits. I just wait, like as soon as it gets here, I wait for price to confirm with the candlestick. Any candlestick, as long as it's a, let's say now if I'm waiting for a sell move, as long as it's a red candlestick that has a bit of a momentum, or it's a reversal candlestick, I take that trade. Like I'll just start placing my trades as soon as possible. That's a risk entry. It's a risk entry, but then it gives a lot. It pays a lot. Because what you could have got here, let's say after this, okay, let me zoom in a bit to see if you had any. Okay, you can simply see this doji here, this one here. So let's say you place the sell below it, right? Because you've been waiting for a sell setup somewhere around here. I mean, a sell entry somewhere around here. Obviously, your stop won't be so further away. 15 pip. That's what I normally get, like when I use these risk entries, and your target is here, your first target. You can simply see that one trade is giving you how much? 11%. One trade is giving you 11%. And let me show you a quick example. If you take the same trade, but then now not as a risk entry, as a reduced risk entry, that means that you're waiting for price to break here. Okay, as soon as price breaks here, you're gonna place a sell entry. Okay, broke here. The stop loss is gonna be somewhere around here, above this level. And your target is gonna be here. Can you see it's still the same trade, but now I'm getting 12% for my risk entry. You're getting 5%. But what it simply means is that I'm gonna be taking a lot more losses than you are gonna be, because I'm taking these risky entries and you are taking non-risk entries. But when I get that profitable trade, it can like give me enough money that will just like that one was like what, 12:1, meaning that 12 losing trades or just make one winning trade. Can you see? So that's the only difference on it, and it's also a personal thing to choose whether you want the risky entry or the reduced risk entry. Okay, but with this one here, I can't complain. One thing that I can say is that this one here is a very beautiful setup. You can simply see that this one has to get all the way down to here, but you can't sell it now. You can't sell it like now when it's somewhere around here. But I noticed that somewhere around here, it will find support here, and it has to just give us that 6 to 8 hour, because it started here. If you take a look at this here, this was the start of a correction. So if you can wait at least 1, 2, 3, 3 more hours. After waiting 3 more hours, you can place maybe your sell limit below here. Okay, let's say that's three. Let's say it played out or it stalled for 3 more hours. Place your sell limit somewhere below here, and then maybe you can just keep your stop loss somewhere around here, and then your target is still all the way down to here. Okay, can you see that's understanding where you're gonna enter is what's more important, because if you just be able to see where the trade is going, and then after a week you look back and then you're like, you went in my direction, but you didn't make any money from it. You're no longer a forex trader. What you are is an analyst. You can just analyze. You can just be able to say gold is gonna go up, but can you make money off of it? That's what makes you a trader. Okay, trading is getting money off that analyst, that move that you just anticipated. So with this one here, let's wait 3 hours. As soon as the market opens, 3 more hours, and then I'll just update it, because I'll update it, send it in the group before I enter it, and then it has to go down, go all the way down. I believe this one is going to be that setup that's going to give us an entry somewhere here, and it's going to impulse down, then give us another entry. That's why I don't want to be left in this trade. I want to be able to catch these 2 trades, because that's what's going to make our full week. Okay, so that was EuroCAD. That was EuroCAD. Let's move on quick to the next setup. I believe that you guys saw and don't have any questions on it. There's a beautiful setup, though, I won't lie. This is a very beautiful setup. Okay, let's move on to AUD CAD, which we're seeing a short. Okay. Let me just move on to the 4-hour quick. The reason I don't start up first at the weekly and daily and stuff, I do that when I analyze deeply and stuff, but as soon as I'm able to come up with that bias and that entry and all those things that are needed to take the trade, which you get them at the 1 hour, obviously, because the bigger time frames give you the momentum in the movements. So as soon as I get those entries and stuff, I don't normally go back to the bigger time frames. Do you see that? So I don't want you guys to be thinking that I just use the 1 hour, and it doesn't work that way. Okay, let me clean this up a bit. Okay, there we go. Like what I was trying to show you too with the multi-touch confirmation and taking an entry is that if you take a look at this, you'd be waiting for the third touch now. Take a look at this, the first touch, second touch, you're waiting for the third touch to get somewhere around here. It got you with the third touch, but take a look at this beautiful setup here. You're waiting for a reversal now. And if you take a look, if you've been through your notes and stuff, you'll simply understand that there's an impulse candle. There's a doji, which means undecided, which means change in trend. This is a impulse of the opposite trend, which means that it has confirmed that it has changed in trend. Do you get it? Like whenever you see this, just know that the market will change trend. The market has to change trend. So now when you see this, you know that, okay, third touch confirmation, it has confirmed. I'm seeing this beautiful doji and now this impulse to the downside. Oh, so from now onwards, it's going to just be impulse all the way down and break and go all the way like down to the targets that we're going to be looking at. And another thing that plays an important part too is that with that third touch happening here, you can simply see the structure here that I've got. Okay, you can simply see and you can understand that there's another structure within a structure pattern. Like one thing that I always say to my friends is that if I can, like the way I enjoy trading these kind of setups, I can just trade them only if possible. I can just stick to trading, seeing this pattern within patterns only, and just managing accounts and doing all of that just like this. Like, because these are the ones that pay the most. These are the ones that pay the most. Even if you see a beautiful setup on the other, let's say, different strategy, these kind of ones are the ones that you're gonna get more money from. Because if you take a look at this, like look at this third touch that we've been waiting for here. Okay, third touch that we have been waiting for. But as soon as it got here, we said that we're waiting for what? For a confirmation to go to the downside. Look at this. There's an engulfing candlestick. There's an engulfing candlestick. So automatically, you can place your sell just below. Okay, let me do this. You can place your sell just below here and your stop loss just a bit above, which is, I'm sure it will be like 20 pips or something. Okay, just there. It's more around 20 pips, yeah. You can simply see that, okay, you risking 20 pips and going all the way down. And one thing with these kind of trades is that when you're seeing a trade that has moved like this, can you see that it has left us with maybe 7 pips, or yeah, it has left us with 7 pips. One thing that you should do is that you shouldn't just get in the market and sell it same time. You shouldn't do that, because you're selling it at a level whereby you don't want to sell it at. So rather what I like to do is that even if it left me with 7 pips like this, what I will do is that I'll still take this trade the way that it is. Do you understand? I'll still place a sell limit instead of a sell order. I'll place a sell limit a bit up here. Can you see? So thinking or believing that hopefully when the market pushes a bit up, it can activate me and then still the same stop loss and then maybe continue to go down with me. Do you get it? Instead of selling it now and then maybe it pushes up, then I'm in a negative, then it goes down, then I'm in positive. I just want to be in positive. So, what's it? Okay, you can simply see that our first target is gonna be here at the 90% rule of the structure here, but that's not what I'm looking at. Even though it's 4%, I'm not looking at this. I'm looking at the bigger target here, which can be like, you know, we're always holding our trades. So this one here can maybe take like four days, yeah, 4 days, and possibly give us something like what, like 12%. Okay, 12% on four days, in 4 days. Okay, but understand how you're gonna take this trade. Someone would say, okay, the way that you're taking the trade is a bit risky for me, I won't take it. Now it's okay, I understand. One thing that you can do is that, let me remove this quick. One thing that you can do is that you can simply wait for this to break out from here, because we're still going to be in the same tree, just that you're going to enter it late. You can wait for this to break out. Once it has confirmed, maybe give us that 6 to 8 hour correction, then you can start taking your sell trade. This would be now locking profits and looking to enter more trades. Do you see that? Okay, but this one, the reason I'm putting my sell limit here instead of selling it as soon as the market opens is because if you take a look at this area here, previous resistance, now support. So I'm just believing that maybe after this candlestick, the next candlestick that open can just come up with the week. You know, it's like even weeks are able to activate you. So it comes up with the week, maybe activate you, then go all the way down, then goes down. You know, it's much better to be activated at a level whereby you wanted to be activated at, instead of what the market wanted you to be activated at, instead of being involved in fear of missing out. Okay, so with this one here, we're looking at a 4% as a average. Like that's a normal setup. First target is 4%, but the overall one is 12%. Even the previous setup, what we had, the first one we had the 3%. So basically this week here, even if we have like 5 trades that hit stop loss and 1 trade that go in our direction, we can still have a profitable week like we always have. Okay, so now you guys, there's no questions on the AUD CAD? No questions. Okay, let's take a quick break, a 3-minute break, and then we're gonna move on to the next page, and then I'll just give a bit more valuable parts on the entry, the types of entry, basically. Okay. All right.
Yeah.
Okay. Oh yeah. We saw the AUD CAD. Now let us move on to the next 3. On which the first one that I want to move on to is this Euro CHF. We don't normally treat this pair. I normally don't like the Swiss franc pairs, the CHF, because they consolidate a lot. Like they're very corrective. But now we're able to see a beautiful setup on it, on which we'll see if like this pair is like rotate as well or not. But the Euro CHF. And yeah, I hope you guys like these setups that are sent in the premium group. I hope you also do the same. And whenever I send the setups, you're able to just see on whether like it matches with your one or it doesn't. And if not, sorry about that. If it does, like, or what is it that you done right, or what is it that you done wrong, or if it doesn't, like the same thing, you understand? So shouldn't just rely on the setups that I'm gonna send, but as well be able to make these setups on your own. Okay. Okay. Now I want us to take a beautiful look at the Euro Swiss franc. Okay. So now you can simply see that, okay, we don't normally use support and resistance in the manner whereby people use it. Because what a person would do is go all the way back and then look for previous support levels and previous resistance levels and try to make future try to make future forecast off of the previous things, which is not what. What we do is that we're using the most recent structure, high or low, to be able, it will show us whether can you please mute the sounds, because your mic's cause I'm getting this stopped a bit. Okay, yeah, they're good. Perfect. Okay, yeah. So what normal people would do is that they'll choose support and resistance from let's say back like what 2017, and they'll try to anticipate a move in 2019, which shouldn't work that way. What you should do instead, you should just look at the most recent structure, high or low, the most recent one, because it's telling you if, let's say, it has found the resistance somewhere here recently, it's more likely to find the resistance if it comes back here, because it simply shows that there is strong resistance area somewhere around there. Do you get it? Even the same thing vice versa with the support one. But what a person would do is that prices found the resistance at this level, and then at some age it didn't respect that level, it didn't like treat it as a resistance anymore, and then it came back to treating it as support like after years. So now a person would want to use that as support and the resistance, which is not done well, because you can simply see that the market is just moving up and down past that level. So here you can see the market is approaching this level here, but it's not what matters is that it's not whether it's at support or whether it's at the resistance, it's how it gets there. Do you see how it gets there is what plays the most important, it's the key component of this whole strategy. Because if you take a look at how price is getting at this resistance level here, you can see that okay, price had an impulse to the upside, but then now since it's approaching this resistance zone, it's moving in a corrective manner to the upside. Okay, it's moving in a corrective manner to the upside, meaning that slowly it's no longer shooting upwards like how it done with these candles here. Can you see with these candles here, it's no longer moving in that manner. It's simply showing us that now the bias or the bullish is running out of momentum, which we can expect a change in trend anytime soon from here. Do you get it? Which is why we've got this beautiful structure within here, which simply shows that okay, it's an impulse structure here, which will act as a reversal. So one thing that you can do is that normally the kind of entry that I would take is okay. This is seen as the first touch, second touch somewhere around here. As soon as price gets here, exactly here, I can just place a sell limit on. So I can just sell exactly at it. Okay, meaning that obviously when I say sell exactly, it doesn't mean it gets there. Sell market execution, it gets there. That confirmation that I'll be waiting for, reversal any type, then I place my sell. Can you see? And then it'll go all the way down with me. The risk reward on it is going to be very, very great. I'll show you now quick. But another type of entry would simply be you saying that no, that's a very risky entry. I don't want to take it's still moving upwards. I want to sell something that's still moving upwards. So instead, what I want to do is that let me show you the risk reward that one can get on this one here. Okay, that's the somewhere around here. It does a reversal candle somewhere around there. Which there's times where the market is even telling us that you can have a 3 pip stop loss or whatever pip, but I don't normally, I just like to keep it to at least 15 pips, because even, let me give you a quick example, 15 pips will just be much more safer. Can you see? Here's 15 pips, it'll be much more safer. But even if you have a 10 pip, this is going to be a beautiful one. Even if you have a 10 pip, it'll be a beautiful one, and your first target simply is going to be here. The first target is going to be at the 90% rule, which is seen here as let's see the risk reward on it 11, 1:11, and we can just push down once more to the very low, believing that this is creating lower lows and lower highs. So if we believe that it has to break these lower lows and create new lower lows, is that we can expect maybe something like a 16% on a single trade. Okay, there's something that we can expect. Even here, okay, this just that this one here wasn't a very good reversal candle, because you can simply see that there is a longer wick here. If let's say the candle close somewhere around here, I'll see this as an engulfing, and then I would take this trade let me show you. I'll place my sell order below. Obviously I wouldn't take market execution. My stop loss would just be somewhere above this resistance line here, which even 11 pip is okay. And then my first target being obviously here 9%, and my second target being somewhere around 14, I'm sure, yeah, 13.7%. okay, but obviously we don't treat the same way. Someone would say no, that's very risky, I want price to at least break here. So what you can wait for is for price to at least a candlestick to close below the support area, close below it, and then once it does close below it, you can place your sell stop loss same way, somewhere around here, and then still have the same targets with us, which is now 6%, and the next one would be 9%, which is a very awesome trade, because if you take a look at it, you take in the trade when the market has confirmed that it's going down, and at the same time you get in these huge rewards from it. Do you understand? So this is a very beautiful setup that you guys should take advantage of. This one is the setup that you can take advantage of, because even if it, one thing that you should know is that the market, like, nobody owns the market. It can still play around, it can still just a few more, then all the way down. Can you see? As long as it doesn't impulse up, it's still a sell setup, you know. As long as it does this, it's still a sell setup. It's still up until it has to break down. You know, that's when we'll be in the trade for real. But you shouldn't just maybe take the trade. Let's say take a sell trade now. I don't know. Let's say take a sell trade, then it goes up. You just stop. Then you think that it's no longer a good trade, then you leave it. Then find out that we took it even again here. Then it went down with us. Can you see? So if a trade, one thing that I was telling, I think it was Shawan, he asked me in the group, is like, how do you, like, if let's say normally most of your trades, even if they go against you, you normally get them, you normally make profits off of it. How do you do that? And I told him, like, no, if let's say now this trade here, a normal trade, just as simple, the first target is promising me 12%. The risk is 1, it's promising me 12%. Even if like I take this three times or 4 times in a row and it keeps on hitting me, that one time that I get it, I'm gonna make the 12%. It can even be more than 12% because now I got it at a higher level. But let's say it's 12% minus that 4%. What is my net profit? My net profit is 8%. Do you still see that? I'm still in profits up to, like, the rewards that I am chasing are much more greater than that loss or the risk that I'm seeing. Can you see? So you should also get that concept, like, even if a trade hits your stop loss, it's still the same trade. Like, it's still, it has to go down and stuff. You can see it's going down and stuff. You don't move your stop loss or anything like that, but instead believe that, you know, you were wrong to have your stop loss there. Then take a new trade, you know. But as long as the rewards are much more greater than the profits, then I don't see why you should leave a beautiful setup to take a sell, hit your stop loss, then you give up on it. Next thing, after you look at it in a week, it's already down yet. Then you telling yourself that you could have took it, but you never took it, which sucks. Okay, so that's not what we do. We treat this way. Let me move on quick to the next one, which is the GBP US dollar. GBP US dollar. Okay. Hope you guys are seeing a lot of value from this here. Now let's take a look at the GBP US dollar. The last time I checked, also had a beautiful setup on this one here. We just have to be a bit more careful with this one. We just have to be a bit more careful. And just to confirm something very quick, the same thing that I've been speaking about, that multi-touch confirmation. Take a look at this. Can you see here what happened? Let's say now this was the second touch, this is the third touch. Simply this doji came, this beautiful doji came at the third touch. Then price just shot all the way down. It gives this beautiful correction, shot all the way down. Can you see? Okay. Let me move on to the 4-hour time frame quick. Our time frame, which is the 240 minutes. So we're just able to see on what is it that we are seeing with this pair. Why do we have the setup that we have on this pair? Okay, which is a short setup. It's a very short week this week if you take a look at it. Okay, I want to move quick to the 4-hour time frame, so we're just able to, because on this one, one thing that I like about this pair is that it's very interesting. There's types of, you just have to be smart taking this trade that I'm about to show you. Like, you have to be smart taking this trade. Okay, let me do this quick. If you take a look at it, market has been impulsing all the way down, but as soon as market started getting somewhere around here, this is just one huge correction zone. Okay, the market is correcting within this phase, but then when it's correcting like this here, you can simply see what the price is forming. Here it's forming lower lows, lower highs, lower lows, lower highs. But then as soon as from this lower high came somewhere around here, didn't break the high, came here higher low, higher high, higher low, higher high. Can you see? So now if you take a look at it, this price still has to break this lower highs for us to say that it's a beautiful buy setup. I mean, it's a beautiful bullish momentum, because whenever you see it moving to the upside, it's not impulsing up, it's just moving in a corrective manner to the upside. Can you see? But here, if you take a look at this zone here, you can simply see that this here seems like a beautiful double top. First peak, second peak. Okay, first peak, second peak, and it's been previous resistance level. Okay, I don't want to use a lot of resistance support, but you can simply see, and this is just the double top. I mean, the double top, yes, double top formation. And as soon as it moved down, it didn't impulse all the way down, but then it's moving with the correction that eventually has to break to the downside. Okay. This correction eventually has to break to the downside. Okay. I'm going to show you something quick before I move on to the 1 hour and the types of entry on this one here, because that's very important. You know, it's okay to know that a trade is going down, but you have to know where you're going to enter the trade. Okay. And just to touch on it quick, remember the simple method that I was speaking about, the multi-touch confirmation. You can simply see our first touch being our second touch, our third touch. And yes, I'm going to speak about this a lot more, because this is like, it's very important to know these multi-touch confirmations. You know, it's very, once you understand, once you even master this thing, you can even have those. I remember even Milano once asked me, how do you get such entries? It's because of the multi-touch. Simply knowing that, okay, GBP US dollar, GBP JPY, as soon as it gets to the third touch, normally it doesn't like to stall around or do anything like that. It likes to go, like it likes to reverse somewhere around there. So I know, okay, let me wait for the third touch. It got you the third touch somewhere around here. Got you with the third touch somewhere around here. Then I take my entries. Can you see? So as soon as it goes up, it gives the third touch. Or I just place maybe a sell, a sell limit, a sell stop, no, sell stop, somewhere below, knowing that when it does respect and come down, I'm in the trade, it'll activate me. Can you see that? So the multi-touch confirmation, it really does help a lot, understanding the pair on how it moves and understanding how you're gonna be able to capitalize. Because normally with the multi-touch, when you have mastered that, your stop loss can even be 3 pips. You know, like imagine taking a trade here with the third touch. This is the second touch. Here's the exact third touch. As soon as it touches it, you sell. So like there's no more risk. Like you're completely taking, you can even use a bigger lot size, because you're risking what, 4 pips, and your 4 pips can just be something that you're willing to risk. Can you see? So with this one here, you can simply see that price is moving downwards, but then it's not moving downwards with an impulsive phase. It's not impulsing all the way down. It's because of price is just creating, it's like this pattern here that has to break to the downside. Okay, this usual structure pattern, it has to break to the downside. Okay, I'm just waiting for this to load. Okay, there we go. Okay. Okay, if you take a look at this is just simply, it's just creating your lower lows and lower highs, and then your lower lows, and then your lower highs, and then your lower lows, and then your lower highs. Can you see? So now we just we want to capitalize on the lower high, like want to buy at the lower high, believing that it has to break the lower low. Because if you take a look at it here, okay, this is a lower high. I mean, no, this is a lower high of this high, lower high, lower high. Here's our next lower high. Can you see? Okay, let me also do this here to just confirm something with you quick. Well, we want to sell at the lower high, because that's where it will be the highest, the price will be the highest, you know, going all the way down. Okay, let me do this. Okay, the network is a bit sluggy, but there we go. There we go. But yeah, simply what you can see here is that first touch, second touch, third touch here, this reversal candle. Even how price is getting to the third touch is with the continuation pattern to the downside. Because if you take a look at the structure here, simply means that it has to break to the downside. So here you understand that, okay, no, price from here onwards, it has to go all the way down. One thing that I like about this pay is that the target is not only maybe here or anything, it's all the way down to here. Can you see? It's all the way down to here. So even if you take a reduced risk, and let's say it breaks down here, you take this reduced risk in 3, which is going to be a bit bigger stop loss. The target being here, you can still capitalize what, 7%, 7.9%. Okay, you can still capitalize 7.9%, but I'll just show you on how I'm going to be looking to take this trade. Okay, but yeah, you saw on why we're seeing this beautiful sell setup on it. Let me just move on quick to the 60-minute. Okay, one thing that I highly believe in is that price can catch people on the wrong side. Like people can be caught up on the wrong side, because what price can do here is that it can simply go back up and then give us a third touch of the structure so near. Can you see? So one thing that can happen is that this is more likely to happen. Understanding GBP US dollar, this is more likely to happen. You know, like I'm sure you have experienced it maybe with GBP USD, that you take a trade believing that it's gonna go in your direction, then it doesn't hit your stop loss or anything, but then it still stalls around the same area for hours, and then it'll impulse after hours. You know, it's the same thing that I've been experiencing with GBP US dollar. So I'm able to understand on how it moves, because simply understanding it can simply come here for the third touch here and then go down. Can you see? So someone can just be selling here and then be impatient when it gets here. Then maybe they close losses, or I don't know. Then when it goes down, be like, I could have caught that trade. You get it? So this one here, I see a move like this happening. But if not, if it doesn't give me this type of an entry, because this one is going to be a very beautiful entry. I mean, like as soon as it gets here at the top area, maybe giving us a double top here, or just a thing, a reversal, reversal candlestick somewhere around here, can simply just have your stop loss be maybe 25 pips or something, then go all the way down to that first structure with it, which is more than 20% though. But if not that way, then you can simply wait for candlestick to close below here, but I wouldn't take a saw and have my stop loss here. I feel like it's too big for me. I feel like for me to have a stop loss that's this huge, it's like waiting for giving the market enough room to tell you that you are wrong. Do you get it? You just have to know when you are wrong. So what I'll do is that I'll just wait for the 6 to 8 hour, or even a retest at this support area, previous support, now resistance. I can wait for a retest, then take this sell trade, go all the way down. Okay, then I'll just take it as this. Okay, let me do this quick. Yeah, I'll just take it as it has presented itself, meaning that, okay, I'll just take it like this and have my stop loss somewhere around here. Can you see the way it has presented itself? Then I believe that, okay, when I go down with it, but then I'll do what I normally do before I take these trades. I just send them in the group. Okay, which you can be looking at and it's not so big. Like someone would be like, this guy is mad. It's too big. You can't get there. It'll get you. Okay, something like a 22%. Something like a 22%. And you should know that whenever, like the market doesn't take long to move. Like let's say from here, if you take a look at from here, it's the 2nd of January. Let's see how long it took to get somewhere around here. The 24th of January. And it's not even like it's from, okay, let me just do this quick to just show you something. Let's say you take this trade. Yeah, okay, yeah. Then your target is here. If you take a look, it started at the 2nd of January till the 23rd of January. So it took what 20 days. Is it 20 days? 20 days. Okay. It took 20 days to get all the way up to here. But understand this thing. Whenever the market drops, it drops 3 times faster than it went up. Whenever the market goes down or drops, it drops 3 times faster. That's how you have things such as hearing that the market has crashed, you know. So whenever the market drops, it drops 3 times faster. You won't even see the drop. You'll just it will just be down there already. Like, see this movie, see these big drops that are happening here. Do you understand the concept of how these drops are happening? So it can take, it took what, 21 days. So 3 divided by that 21 days, it's simply what, 7, can take 7 days, which is a week, just a week, 5 days, and the next 2 more days. Okay. So this one here is going to be a beautiful setup. One thing that I like about it is that it's 22% on just a single trade, meaning that this one trade, you can just sell this one trade and not even trade for the next 2 weeks and just manage this trade. Just keep on managing, protecting your profits, You're still gonna be in heavy profits afterwards, you know. So yeah, we've got GBP USD here. I believe you guys saw how we're gonna capitalize on this one here, and the kind of entry you can take any kind of, just know that this is going down. You can have any entry. It's a personal choice. But the type of entry that I would take is when the market has presented and move like this. Let's, after the breakout, wait for a 6 to 8 hour, then I take that sell because I know my stop loss is going to be small, or wait for the market to come somewhere around here. Then I take my sell because I know my stop loss is going to be small. One thing that I do is that whenever I take these trades, I don't want to make as much money as possible, but then I want to protect as much capital as possible. You have to protect your money, knowing that yes, there are chances of you making money, but protect what you're losing. Protect what you're losing. Okay, let's move on to the last pair, the very last pair, which is the GBP CAD. Okay. This is the only setup that we have a different bias on it. We've got a long setup on this one here, which I will show you why. Okay. Okay, this one here, I feel like I need to start here quick with the daily, just to show you on how this move can happen. Okay. So like if you take a look at this whole move here, this is just one like it's an ugly move. This move here, it's very ugly. We want moves like this to happen. Okay, moves like this to happen. That's why we anticipate these impulse corrections and stuff. So now with this one here, you can simply see that there's just a deeper correction on the bigger time frame. Okay, but now I'm understanding on how the market moves is that with this one here, this structure here, I'll just show you when you zoom in on the 4 hour, but you can simply see there's an impulse. This is just a messed up correction. So expecting an impulse all the way up, maybe up until here, then that drop to the downside. Because if you take a look at it, just that I didn't analyze more on having this. I didn't analyze more on having, okay, on having this resistance zone. But what you can see here is that possibly what the market can do is that you can just come up to here, somewhere around this level here, then go down. This level will also be like a resistance to this level and a resistance to this third touch. But the reason I'm able to anticipate this move is not because of I'm thinking it has to do this. It's because of this impulse here within this deeper correction, this impulse, this messed up correction, then anticipating that next move to be an impulse, because the correction was a correction that has to break to the upside. Okay. And one thing you can see, first touch, second touch. So at the third touch of the support, we believe that price has to just continue to push a bit higher. Third touch of support. So here we're seeing maybe price coming somewhere down to here, then going back up. Okay, I'll just show you guys how we're going to capitalize from this one here. Okay, you can see here on the 4 hour, it's even much more clearer. It's much clearer on the 4 hour. Very beautiful setup. Okay. So, okay, check it out. You can simply see our first touch here, our second touch here. So we believe that a third touch should be somewhere around here. Okay, our third touch, but obviously our first target is going to be here. This is where our first target is going to be at, and then here it's just going to be extra more profits. It's just going to be extra more profit. So now understanding what the market is doing here, we believe that okay, price has to come here for a third touch, then it will come down and eventually break. But now one thing can take a look at here at the support area is that you can simply see that market wants to give us a third touch at the support area. And even if you take a look at this quick, I'm just going to remove it though. If you take a look at this level here, this is just one simple support level. Can you see? One simple support. So possibly price can just come support, go back up. And we don't only have this level as support, we have even this one here. This is what's making us say it's support. This one is just for others that believe in the support resistance strategy to see on, like it's almost like the same thing, just that we are seeing things in a much more deeper perspective. Okay, so with this one here, obviously the reason I saw a beautiful setup on this 1 hour time frame is that I saw this impulse correction impulse that can happen here. This impulse, this correction, okay, this impulse that can happen. Can you see? So one thing that I can say you can do is you can either take, this will be a very risky entry, because one thing that I can take is that this is the first touch, second touch, third touch at the support area. Remember, I always speak about this is if it's a continuation to the upside, let's say if it's a pattern that breaks to the upside, if it touches the support area 3 times, the next one to the resistance is going to break. Vice versa with the one that breaks to the downside. So believing that this one here has to break, having a sell, or a buy limit somewhere around here can protect a lot, because simply what you can do is that you can have a buy limit and then maybe have a, okay, just that the pips on this one are a bit more different. Maybe okay, let me see. Okay, 38 pip. 38 pip, then our first target being somewhere around here, which can take 2 days to get to here. Okay, 9%, and then extra more profits would just be maybe 12%. Can you see? But if not, let's say you're scared of taking these types of that's the entry that I can take. As soon as the market open, I can place that with confidence even, because I like taking these trades. But if not, you can simply wait for, okay, then this breakout, then you take this buy, which is also a very good trade because it can still be the same types of rewards. Okay, I can even still take this one here too. First target being somewhere around just 7%, second target being somewhere around 11%. Okay, these two can happen. These two can also happen. And one thing that you should get to is that it can also not respect our support line. It's very possible that it doesn't come respect our support line. Maybe pushes a bit lower and maybe pushing us to be able to evolve. Okay, so pushing a bit lower, somewhere around here, then going back up. This is also possible. It doesn't mean that it'll go back somewhere around here. So I mean that if I already have a buy entry here, it can hit me out, or maybe if let's say my stop loss is just below this low here. One thing they should know is that it shouldn't go below this low, because it's going up. It shouldn't break lows. It should break highs. It should break these highs, not these lows. Do you hear it? So if you have your stop loss somewhere below here, and anyway, like whatever trade that you're taking, your stop loss here, that's a much more safer way. Just that it's gonna be huge. I don't like it because it's gonna be huge, but it's a much more safer way. Okay, that's GBP CAD, and I believe that you guys saw on how we're gonna capitalize on these trades. Do you guys have any questions?
Nope.
You guys are sorted.
Just ready for the market.
Ready.
Ready.
Like did I explain a bit more on the types of entries for you to understand?
Yeah, bro.
Yeah, because I was just focusing on the entries for today. So yeah.
Did it well.
What's it?
You did it well.
Oh, thanks, man. And I think it'll also be nice if, let's say, members also in the group can let's say before live sessions they can say what they would like me to focus on, and then our live session can also be almost like a lesson about that specific thing. Do you get it? Like if structure it's structure, you can tell me about structure. Then I'll do the normal market breakdown, but I'll just be focusing more on structure so you get why it's this specific structure. Okay.
Yeah, we'll let the others know.
I'm glad that you guys were able to just see and get away forward. Yeah. As soon as the market opens, we are going to capitalize, and I'm going to send these trades in the premium group. Okay.
Let's do it.
Let's get the let's kill the market, bros.
Oh,
Thank you guys for joining, and I will send you the recordings, name.
no stress.
I will, thanks, bros.